Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.3% today. September is keeping up its reputation as the worst month of the year. We're down every day so far in September, but we're still quite high. We're at 5,500 on the S&P, which is a really big number. The all-time high is 5667, so we're not that far from it. I expect more weakness and softness to come. Again, we've had such a big run since last October. So if you look at, what's been made in total in that time frame, it's been quite healthy. And, you're going to have slowdown periods, especially if you're going to have a healthy market. You need these slowdown periods. And, with the seasonality and what have you. Now, the market is looking at the situation and wondering if the economy is slowing down too much. And is the Federal Reserve behind, in this particular case? And that's been, been talked about quite extensively since the July meeting. And once we get the minutes from the July meeting, we found out that some of the Fed governors wanted to do a rate cut in July. I think they probably should have. We got some, softer numbers, especially in the employment market that came out right after that meeting, and now it's just more pressure to maybe do a 0.5% here in September, and that kind of thing. And it's unfortunate that the Fed has had such a poor track record in keeping us out of recessions historically. They either stay up too long or raise rates too much and cause these things over and over again. Not that they're bad people or don't know what they're doing. This is a very, very difficult job. The cuts and the increases that they do don't hit the economy for months, and so it's very hard to see that far in advance what might be happening and such too. So the market is expecting some significant rate cuts, a full 1% this year, which is kind of interesting. The market has been very aggressive on expected rate cuts this year, has been wrong so far. So we'll see how that plays out. But I would think you're going to have at least a 0.5% rate cut this year, if not a little bit more. So again, the big jobs report comes out tomorrow. This is a big deal. This is a report that comes out at the beginning of the month here to say what happened last month, in this case in August. When we got the last big job report in August, the market dropped because it was less than expected. I think it was 144,000 jobs, and it was supposed to be 177,000 jobs. So, market's going to be kind of very interested in what happens with that job report tomorrow. If it's, really bad, the market's going to wonder again if, are we behind the curve? Is the Fed behind the curve here? If it's really good, then market will be, maybe they won't do a 0.5-point rate cut like they need to, that type of thing. So probably best case scenario is it comes in something around consensus. So we'll see how that goes. But we will be talking about the jobs report, on the show tomorrow. Have that show from 12:15 to 1 on YouTube. Talk Money with Tom. I do a summary at the beginning and kind of dig into what's happening as far as that goes for the week and overall. But here's the overall thing I think is, bull markets last, if you go back to 1970, about 5 years. And we are going to be at 2 years here in October. Earnings are doing well altogether. Artificial intelligence is an exciting area as far as that goes. They will probably be lowering rates here this year. That's usually a supportive thing for the stock market. So if this market goes sideways or comes down for a while, I think eventually we'll go back up to a new all-time high. And then that's motion we've been making here, since the middle of July, kind of this down to sideways motion will be support that'll help us, in future time frames. So this is just, just wait. Again, go back to October, look at the returns, that have been made here in the market. We deserve some time period where we're going to have some softness, and I think it's actually a healthy thing for the market. So anyway, that's what's happening right now. We'll see what happens tomorrow, and look forward to seeing you on the show. Thank you.